Ever thought about how a simple piece of paper holds so much value? It's the enigma of the fiat monetary system. Welcome to the world of fiat money, a system where currency has value not because it's backed by a physical commodity like gold or silver, but rather because of the trust and confidence we, the people, place in the economy. It's a fascinating and sometimes perplexing concept, isn't it? Now, you might be wondering how this all came to be. Well, it all starts with the government. They declare a certain currency as legal tender, which means it must be accepted as a form of payment within the country. This decision by the government is the first step in establishing the value of a fiat currency. But hold on, it doesn't stop there. Just because the government says a piece of paper is worth something doesn't necessarily make it so. The real value comes from you, me, all of us. It's our trust and confidence in the economy that truly gives that piece of paper its worth. When we believe in the stability and growth of our economy, we trust that the money we hold today will hold its value tomorrow. However, it's important to remember that this isn't always a given. Economic conditions can change, and with them, so too can our confidence. If people start to lose faith in the economy, they may no longer accept the currency as valuable, which can lead to a decrease in its value. This is why managing the economy and maintaining trust is so crucial in a fiat monetary system. And let's not forget about inflation, the silent thief of purchasing power. When the government prints more money without a corresponding increase in economic output, the value of each unit of currency decreases, which can lead to higher prices for goods and services. This is one of the major challenges of a fiat monetary system. So, essentially, the value of fiat currency is a game of trust and confidence, which can be a delicate balance. Now, let's delve into how this fiat monetary system impacts the economy. Imagine the government as a magician, and the fiat money is its magic wand. With a wave of this wand, the government can print more money, intending to stimulate economic growth. It's like adding fuel to the fire, igniting the economy's engines and propelling it forward. Businesses can borrow more, invest in new projects, create jobs, and consumers can spend more, driving demand. However, like any magic trick, it's all about balance and timing. If the magician, in this case the government, waves its wand too much, printing more money than the economy can absorb, it can lead to inflation. Inflation is like that sneaky thief in the night, eroding the value of your hard-earned money. It's the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. So let's say you have $100 today. With inflation, the same $100 might buy you less next year. That's because as prices rise, each unit of currency buys fewer goods and services. This loss of purchasing power impacts the common man the most. The groceries you buy, the gas you put in your car, the rent you pay, everything starts costing more, and gradually, your money doesn't go as far as it used to. Yet inflation is not all bad. A moderate level of inflation is considered a sign of a healthy economy. It can stimulate spending and investment, as people prefer to spend their money now when it can buy more, rather than later when its value might have decreased. However, the key is in managing this delicate balance. Too much inflation can cause economic instability, while too little can lead to economic stagnation. Inflation, thus, is a double-edged sword that can stimulate growth but also erode your purchasing power. But how does this system compare to a gold-linked currency? Let's dive into the differences and similarities between the two. Fiat money and gold-linked currency, often referred to as the gold standard, are two entirely different systems. Each has its own strengths and weaknesses, and their effects on the economy can be vastly different. On the one hand, we have the fiat monetary system. Its main advantage is flexibility. Governments have the power to control the supply of money, meaning they can adjust it to meet economic needs. For instance, during a recession, a government can inject more money into the economy to stimulate growth. This control over money supply can be a powerful tool in managing economic fluctuations. However, this flexibility can also be a double-edged sword. It can lead to instability if not managed properly. For example, if a government prints too much money, it can lead to hyperinflation, severely devaluing the currency and wreaking havoc on the economy. This is a risk inherent to the fiat system, as the value of the currency is not backed by a physical commodity, but rather the trust and confidence of its users. On the other hand, we have the gold standard. This is a monetary system where a country's currency is directly linked to gold. The pros of this system are largely about stability. The value of the currency is tied to something tangible, which can provide a sense of security. Inflation is less of a concern, as the supply of money is limited by the amount of gold available. However, the gold standard has its drawbacks. One of the main disadvantages is the lack of flexibility. Governments cannot simply create more money during economic downturns. This can lead to deflation, where the value of money increases, but economic activity slows down. Additionally, the gold standard can be vulnerable to gold market fluctuations, which can in turn affect the value of the currency. So we see that both systems have their pros and cons. The fiat system allows for more control over the economy, which can be beneficial in managing economic ups and downs. However, this comes with the risk of instability if not carefully managed. The gold standard, while providing stability, lacks flexibility and can be influenced by the gold market. In the end, the choice between a fiat system and a gold-linked currency is not a simple one. It involves weighing the benefits of flexibility and control against the risks of instability and market dependence. It's a delicate balance that requires careful consideration and management. So, while the fiat system provides more flexibility, it also comes with its own set of risks. But isn't it absurd that a simple piece of paper can hold so much value? The very concept of fiat money is paradoxical, isn't it? A mere piece of paper printed with numbers and symbols holds immense power. It can buy goods, services, even influence. But why? The answer is trust and confidence. It's the collective belief of a society that gives this paper its worth. We trust that the next person will also accept it as a medium of exchange, and thus, a cycle of trust continues, spinning the wheel of our economy. But what happens when this trust wavers? When confidence in the system starts to crumble? The value of money can evaporate in the blink of an eye. We've seen this happen before. The Great Depression of the 1930s, the hyperinflation in Zimbabwe in the early 2000s. These are stark reminders of how fragile our trust-based system can be. Let's delve deeper. How is it possible that the value of money can simply disappear? It's due to the inherent flexibility of fiat money, a double-edged sword. On one hand, it allows governments to control the money supply, stimulate the economy, and manage inflation. But on the other hand, this power can be misused. Money can be printed at will, leading to inflation, or even worse, hyperinflation. In essence, the very system meant to foster stability can, in fact, lead to economic crises. Moreover, the fiat system is far from transparent. Central banks, operating behind closed doors, have the authority to control the money supply. This lack of transparency can lead to manipulation, further eroding trust in the system. Therefore, while the fiat monetary system might seem practical, it's not without its flaws. Like a castle built on sand, it stands tall and firm, but only as long as the waves of doubt and mistrust don't wash it away. It's a complex web of trust, confidence, and control. So, the fiat monetary system, while practical, is a complex web of trust, confidence, and control. So, what's the takeaway here? We've delved into the enigma that is fiat money, the currency that holds value not because of its intrinsic worth, but because of government decree. We've seen how this system influences our economy, shaping its ebbs and flows. We've also compared it to a gold-linked currency, highlighting the stark differences and the unique challenges that each presents. We've also touched on the absurdity of fiat money, the seemingly bizarre concept that our money is valuable simply because we believe it to be. But despite its oddity, it's crucial to understand that this system significantly impacts our purchasing power and overall economic health. The crux of all this? It's crucial to grasp the workings of the fiat monetary system, for it determines the state of our economy and affects our daily lives. Remember, knowledge is power. The more you understand about the system, the better you can navigate it.